All right, ladies and gentlemen, it's time to move to the next panel discussion on the topic navigating market volatility. So, ladies and gentlemen, to lead this insightful conversation, once again, I want to invite our moderator for this session. Let's welcome Ms. Mridu Bhandari with a huge round of applause once again on the stage. Now it's time to welcome our powerful panelists for the respective session. At first, we have Mr. Mittul Kalawadia, Senior Fund Manager at ICICI Prudential Asset Management. Since joining in 2026, he has been managing key equity funds including long-term equity, dividend yield, while also co-managing PSU equity and debt funds. Up next, we have Mr. Mayur Patel, President and Fund Manager, Listed Equity at 361 Asset. He brings 20 plus years of experience in investment, research and fund management with previous leaderships at DSP Investment Managers. Up next, we have Mr. Dhrumil Shah, Equity Fund Manager at Nippon India Mutual Fund. He has 16 plus years of experience in equity research and fund management with prior roles at Birla Sun Life Insurance and ASK Investment Managers. And lastly, it's time to welcome Mr. Manuj Jain, co-founder of ValueMetrics Technologies. He is a fintech leader with 18 plus years experience in asset management and previously served as director and head of products at White Oak Capital AMC. Let's give a huge round of applause for the panel, everybody.
Wonderful, we are all here. Welcome back to this next conversation at the ZFunds Founders Summit 2026. A topic very close to all your hearts, I'm sure, navigating market volatility. And no one knows this better than you all the mutual fund distributors in this room today. Markets go up, markets go down. Markets, the volatility is not just a test of the portfolios of investors, but also a test of how you all manage their emotions, manage to keep them convinced and keep the conviction up and help them stay the course in choppy waters. So today we are here joined by some of the eminent minds of the field, and we are going to be talking about what are some of the better strategies that we can have in this day and age for navigating market volatility. Thank you, gentlemen, for joining us here today. And perhaps to open the conversation, Mittul, if I can start with you, what do you think when it comes to market volatility? How much of it is driven by fundamentals, geopolitics and all of the external factors versus investor behavior today?
It's very difficult to put a percentage there, but volatility is generally driven by macro as well as sentiment. Sentiment is like that beta. So if the volatility was supposed to be 1%, there will be beta which will make it either 3%, 5% or sometimes less than 1%. So it's the sentiment. So sometimes people, how they feel, if they feel really worried about it, then the negative side is higher. If they feel really excited about it, then even the positive side also gets enhanced. So it's a combination of both. You cannot always split it. In today's context, there is both which is present. So there is a macro uncertainty driven by higher inflation worries. Because all raw materials, all input cost is going to be higher. And at the same time, people are worried about what will happen to the financial liquidity and the market. So both these things are driving an uncertainty. You don't know when does the Hormuz open, whether it remains closed for another 1 month, 3 months, or whether it is opening next week. So that uncertainty always drives volatility.
Right, absolutely. Mayur, to add on to that, while some of the macro factors have improved, the India growth story keeps getting stronger. There have been RBI rate cuts in the recent past, somewhat recovering credit cycle, income tax relief feeding the urban India consumption story. But of course, like Mittul said, the wars that we are living through, the geopolitical tensions, trade uncertainties, all of these are realities that are hard to predict. Now, in times like these, how do you communicate a very coherent and a long-term equity case to clients? And today, what are some of the top communication strategies that you live with?
Sure. So the key is to look beyond the broad noise, right? We have seen a Russia-Ukraine war. It's now 4 years. Everything is back to normal for us. Crude went to $120, it went to $60. Life is normal, right? Now we are seeing a West Asia war. Again, we have seen a spike in crude price. So what matters in geopolitical factors, we need to see that. And how durable are these risks, we need to identify and communicate. So one interesting point I just want to highlight that our economy is highly sensitive to oil price because we are heavily dependent on oil imports, right? But what has happened is if you go 15 years back, in 2008-9, commodity super cycle, crude went to $140, averaged for the year around $80-85. The import bill was around 6 to 7% of GDP. Fast forward 15 years, the volume growth of imports has been just 3 to 4% CAGR, while the nominal GDP growth has been in double digits. All of us are aware of it. So even if we assume this year, crude remains high for some time and then corrects, we average it around $80, we are in a very good shape because the oil import bill would be only 3% of GDP. That's half, everything remaining same. So the sensitivity of oil on our economy has gone down significantly. Right? So even at $80-85, our current account would be, say, around 2%, very much manageable. Our capital flows can balance it to a great extent. So we are in a really great shape, provided this turbulence gets resolved in 2-3 months' time. If it gets extended to, say, 12 months, that's what creates a risk and delay in market recovery. So one has to look at beyond noise and create a communication which is more facts-driven and give more comfort to the clients.
Right. All right. Building on that, Dhrumil, now that's hard to do, right? What Mayur is saying, that it's perhaps one of the hardest things in investing to know what is short-term noise and what actually will have a long-term impact. What is a real warning signal and how should you communicate that to your clients? Over the years, what are some of the simple rules or indicators that you've learned to spot and you've learned to identify as real warning signals?
Yeah, it's really, interesting to differentiate what is a short-term signal and when that short-term signal become a little longer trend. If we just refresh our memory a few years back, in 2019, when suddenly somewhere in China, COVID erupted. Initially, probably in 2-3 months, that was considered as probably a short-term noise, which will be kind of passed through, and there won't be any big event in the world the way we have seen. But suddenly, when you were in 2020, sometime in the month of Feb, March, that signal became very strong, and we could realize that something big is going to happen. And eventually, sometime in the month of March and April, we saw a complete lockdown in India. So the important thing is to track that small signals so closely and to see that that's, small noise, if it becomes a big signal for some major reversal of the market. So it's a constant tracking of so many macros, so many, noise, and eventually one of that noise can become a really big signal for the market. Just taking that story little ahead, we saw a steep correction in the market, and probably within a short span of 1.5 months, market formed bottom. After that, probably 1 year down the line, probably we saw some good news on vaccine. After that, we again saw that cases were going up in India as well as in globally. But that